Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currency is moving lower this morning as the conflict between Israel and Hamas escalates and as state regulators back the SEC's lawsuit against Coinbase. As of noon Eastern, Bitcoin dropped below $27,000 while Ether traded below $15.60. XRP, meanwhile, fell to 48 cents. Okay, let's jump right into the latest on Sam Bankman-Fried's criminal trial. I'm outside the courthouse as we enter the second day of testimony from Caroline Ellison, the head of FTX's trading arm, Alameda Research. Ellison ended yesterday by talking about Alameda's debt as it stood in late 2021. She told the court that the company had $9.4 billion in debt and only $8 billion in liquid assets. Now, despite this shortfall, she claimed that SBF wanted to pursue $3 billion in venture investments into crypto companies like BitHum and IEX. Ellison concluded at the time that if they went through with those investments, there was a 100% chance of not being able to repay their loans in a downturn. SBF allegedly suggested they restructure some of the firm's loans to mitigate risk, but even with those options, Ellison said the risk of non-payment was around 30%, which she was uncomfortable with. After those revelations yesterday, prosecutors picked back up today by asking about those loans. Ellison said she was in a, quote, constant state of dread as lenders began recalling their loans in the midst of the crypto sell-off in June of 2022. She claimed that SBF told her to repay those loans using Alameda's line of credit from FTX. She also said that Genesis, one of Alameda's lenders, asked for an updated balance sheet, and Ellison said that she brainstormed alongside SBF, Gary Wong, and Nishad Singh on ways to make the balance sheet look better. Ellison claimed that SBF ultimately chose to send a balance sheet that concealed those customer funds. For our main story, Crypto World's Jordan Smith spoke to Josh Frank of The Tie for his take on the trial. They also talk about the state of the industry.
Right now, we have Caroline Ellison on the stand giving testimony for things that we've never heard before in the state of FTX in the months and years leading up to its collapse. Is there anything that stood out to you that she said in the courtroom that maybe we haven't heard before or was revelatory?
One of the things that we saw a few minutes ago come out, though we haven't gotten any more detail beyond just the initial headline, is this idea that FTX was actually manipulating Bitcoin's price below $20,000 using customer deposits. But the other things that I think, we've had obviously a lot more detailed notes from the last couple of days, and the things that have really stood out to me was really, and we knew it was happening, but to see Caroline come out and talk about it is really the using FTT and other tokens as manipulation to take loans against, and actually, trying to hold FTT's price above key levels. As it was mentioned, trying to hold FTT above $1, and then other levels as well. To show that there was liquidity in the asset and to be able to loan or to borrow billions of dollars against to trade. So I think that's one of the things that's, I guess, really stood out to me, as well as the fact that, they talked about this from the start being pre-planned, that FTX was being created to basically be able to access more capital. And I think the most incredible thing to me in all of this is the fact that despite having infinite capital, despite the fact that they never got margin called by FTX, they still managed to lose billions and billions and billions of dollars. They must have been awful traders.
You talked about the loans. I think the thing that stood out to me in her testimony specifically yesterday and at the start of the hearing this morning was that she really sort of painted a picture of a business that was misleading other crypto businesses, lenders, and ostensibly making the contagion in the crypto industry worse last year. Do you think we've realized all of the ways that FTX may have caused the negative effects in the crypto industry, some of those contagion risks? Has that already run through the system, or is that something that you think we'll see more of as we hear more of this testimony and we realize just the breadth with which they were potentially misleading the industry?
I think that most of it has been cleaned out. I mean, you're talking about something that at this point happened a year ago, right? So a lot of it has been cleared up. There are obviously, a few firms whose solvency is being called into question, continues to be. I'm sure some of that had to do with FTX exposure, some of it had to do without it. But yeah, I mean, FTX collapsed the entire industry. I mean, there is no doubt about it. The reason that Gemini customers are out of billions of dollars, and I'm not saying that DCG is not also at fault there with Genesis, right? But it stems from bad loans from FTX, obviously also some Three Arrows related stuff, but FTX was there, right? Trust in the industry has completely collapsed, right? If you think about, and this is something that's not talked about a lot, but a lot of growth equity and big venture firms went out there and they invested in FTX, right? And what's happened, and this is not talked about, is the fact that the partners at those firms that made those investments got fired in many cases. And so now you have a situation in which, these venture funds that are well capitalized, not crypto specific, are afraid to go to their investment committee. The partners are afraid to go to IC with crypto deals, and so it's causing continued collateral damage to the crypto industry. The fact that folks can't raise, what a lot of people don't know, and I can't disclose which specific sovereign wealth fund, but one of the largest sovereign wealth funds in the world from a developed country bought Ethereum on balance sheet going into the merge. They were forced to sell that. And basically say, we're not going to do anything crypto related anymore. And there are just so many instances like this. So it's not just what is happening with crypto companies that are in the market today and having collateral damage on their balance sheet or other things. It is the continued inability of this space to raise capital and to bring new money in because of the lack of trust that people have in crypto, and because people are afraid.
On the face of it, this trial is about misappropriation of funds, which is by no means a crypto specific issue. But I am wondering how the industry moves beyond some of those issues that you just brought up. I mean, how do you take a learning lesson from this trial or from the collapse of FTX and sort of assuage some of those concerns? I think one of the things that comes up for me is FTX and Sam Bankman-Fried is really sort of the idea that this one man is the white knight of crypto. It's the notion that one person is going to save the industry. Is it time for crypto to move beyond that? Is that the learning lesson here? How do you make sense of what happened and what's coming out in this trial and move beyond it?
Yeah, I mean, it's clear that idolizing somebody isn't usually a good idea. Obviously, like with Theranos, Elizabeth Holmes was completely idolized as well, right? In their situations. And to your point, this isn't crypto specific, but it paints a really bad picture on the crypto market. In terms of what's needed to rebuild trust and to get the industry on the right footing, we need to build technology and solutions that are institutional grade, and we need to have institutional grade service providers come into the market to get institutions to be willing to operate in the market. I speak on a day-to-day basis with, the top 5, 10, 50, 100 hedge funds, asset managers in the world. And their concerns are, where do I hold my assets? Where can I feel comfortable custodying my assets? I want to make sure that I'm comfortable with the counterparty that I'm trading against. We need to go back to answering these fundamental questions in order to rebuild trust in the market. I mean, another thing which no one talks about, but which is real, is a lot of the biggest hedge funds in the world were trading crypto. Before the FTX collapse, they weren't trading outside capital. They weren't trading their LP capital, but they were trading the partner's own capital with the idea that they would eventually go from trading partner capital to managing outside capital, launching crypto strategies and things like that. Now, not only are they not launching external crypto strategies, the partners themselves are like, get my money the hell off of Binance. I mean, I've heard that from some of the biggest funds in the world. They're like, I don't want exposure, right? And so what's needed in order to rebuild trust is traditional institutions coming to the market.
Before I let you go, I do want to change gears for just a second. I think I'd be remiss if I didn't ask about this. We're paying attention to what's happening in Israel in the conflict with Hamas. There were reports that crypto may have been used to fund the militant group Hamas and that Binance may have helped shut down those crypto accounts. Hamas is the subject of U.S. sanctions, which brings up the question around how they're getting these funds and how easily. I'm curious for your take on how the industry addresses the concerns around sanctions violations and moving crypto illicitly.
Yeah, I mean, it's a difficult question. I will say that the Israeli government is incredibly, and the Mossad are incredibly well prepared to deal with the issue. They have tracked a lot of these wallets. They're public. We also are happy to help and can provide that help. I think the crypto community has come together in support of Israel and has raised a ton of capital for Israel. It's an issue, but it's inconsequential, right? I mean, if you look at the amount of funding that's come, has been given to the Palestinian people and misappropriated by Hamas, as well as has been given from Iran and other entities to Hamas. that far outweighs the amount of money that's coming in via crypto. And I will add that crypto is not anonymous at all, right? The second you find an address of Hamas saying, hey, we're trying to raise money using crypto, you can cluster around that. You can find other addresses that are similar. We can find the exchanges that they're depositing money on. Crypto is a blockchain, and it's a completely transparent digital ledger. It's actually better. It's much better that they're trying to raise money using crypto than cash, because if they're raising money using crypto, we can find them. The Thai can find them. We're happy to help, right? There's other organizations that Chainalysis, Elliptic, others. That's not even our core business. We have the capability of doing it, right? So I think that, yes, you might be able to get some money in via crypto. The question is just, making sure that they can't get money out, right? Because if they can get money in, but that money can't be withdrawn in any way, it's useless, right? And so I actually, it's, my perspective, it's inconsequential. And on top of that, it's totally traceable, it's totally trackable, and it will be stopped.
Okay, that's all for Crypto World today, but we will be back again tomorrow, and we'll see you then.